Hello and welcome to the market update from 26th February to 1st of March 2024. So starting with the global market, the US Treasury 10-year bond yield is still trading above 4%. It closed to at 4.1993% for the week. If we look at the global market performances, for the week, the US market was positive at 1%. The European market was positive by 2%. If you look at the Asian market, the Nikkei the Japanese market was positive by 2.08%. The GIFT Nifty was positive by 1%, whereas the rest of the markets were ended in negative with close to 2 to 1%. India came out with their Q3 GDP numbers. So India came out with their third quarter GDP. The third quarter GDP grew at 8.4%, and the full year revised projection was of 7.6%. So first we look at the full year growth, which was led by the industry growth, which was due to manufacturing and construction activity, which was propelled by the government as we have seen for the last 1 year. There was a moderate growth in service sector, in financial services, real estate, and professional services. Agriculture was the worst hit, where we saw a growth of 0.7% due to bad monsoon. Now we move to the quarterly growth, Q3 GDP numbers. The GDP grew at 8.4%, but GVA growth was limited to 6.5%. The gap between these two numbers was due to 32% YOY growth in indirect taxes net of subsidies, where the subsidies has contracted by 53.6% YOY. Now the industry for the quarter grew at 10.4%, which was helped by the manufacturing and construction, which grew at 11.6% and 9.5% respectively. The services grew at a decent rate of 7%, which was recovery from the last quarter. The agriculture was hit and it contracted by 0.8% due to the bad monsoons and the net impact of the Rabi and Kharif season. If we look at from the expenditure side, we see that gross fixed capital formation has improved at the rate of 10.6% YOY, which was led by the strong capex from the central government. The private consumption has recovered from the last quarter, but the government final consumption expenditure had contracted by 3.2%. So the overall consumption figure remained feeble, which was below the pre-pandemic average of 7%. So the net exports were negative for the quarter. So we see that though the capital formation has happened, the consumption cycle is still weak in the Indian economy. Now we move to the oil prices. The oil was still trading at above $80 a barrel at $83.85. The gold, 24 karat gold is trading at 62,873 for 10 grams, which is up by 0.01% from the last week. For the week, FII and DII were net buyers, with FII buying close to 23.51 crores and DII buying close to 8,268 crore worth of equity. With this, with this buying, the weekly performances in the Sensex and Nifty closed positive, close to 0.8%. Nifty Bank was up by 1%. There was a correction in Nifty mid cap for the week by 1%. Nifty small cap was also down by 0.7%. If we look at the PE valuation, the PE after this rise, the PE of Nifty 50 reached 23.1, which is well below the 5 years but above the 2 years average. Nifty mid cap 150 trailing PE is at 27.2, which is at 2 years and 5 years high, still at high. Nifty small cap 100 trailing PE is at 29.6, which is close to 2 years high and above 5 years average. Now we move to the monthly performance of the market with a very volatile month this month. The Sensex and Nifty were closed in positive at 1.19 and 1.32 respectively. Nifty Bank was flattish, which closed down by 0.15%. Nifty mid cap 150 was up by 0.27%, and Nifty small cap corrected to by 0.3% for the month. Now we look at the Indian bond market. The Indian 10-year government bond yield is currently trading at 7.06%. There's a news that there's a lot of buying happening in the Indian bond market from the FPIs and FIIs. So this has caused the yield to move downwards. If we look at the yield curves, the yield curve in the short-term maturities is still inverted. Yield curve in the mid-term and short-term maturities and yield curve in the long-term versus short-term maturities is still flat. So that is from my side for this week. Do subscribe, share, like this video so that you can get weekly updates from us.